Hello, everyone, and thanks for joining us. My name is Denny Smith. Today is Thursday, March 28, 2024. Joining me on the call today are Stephenmullowney, the Chief Executive Officer of TRX Gold Corporation, and my old friend Bill Holter, one of the premier gold and silver brokers in the world today. They've joined me here today to share some information on and their thoughts on TRX Gold Corporation. I've been looking forward to hearing from both of them about TRX and also from Bill about the gold markets and how recent news is going to affect the investment that we all have in TRX Gold Corporation. Before we get to Steve and Bill, in this discussion, we want to make sure that you are aware that the conversation today regarding TRX Gold Corporation is not any sort of investment advice. What we're trying to do is provide a platform for a frank discussion about the company and the opportunities and the threats in the current economic and mining environments. But it's very important to remember that your investment decisions are your own, and those investment decisions need to be based on your own personal financial situation and the advice of your accounting and financial professionals. Steve, first of all, thanks for sharing some time with Bill and me today.
Yeah, no problem, Denny. It's always a pleasure to talk to both yourself and to Bill. And I'm looking forward to the thoughts that Bill has on the gold market. I certainly have my own. He'll know who is looking for physical, which is an important part in a rising gold price environment. So,
Absolutely,
I'm very pleased to be here.
And Bill, as busy as you have been in the gold market, and we've seen some strength there, and I appreciate your carving out some time to join us also.
Yeah, my pleasure, Denny.
Steve, we've appreciated the 2023 updates you've shared with the markets about TRX, and I'm interested in the latest updates since your last report, which I think was at the annual meeting.
Yeah, so thanks, Denny. Since the annual meeting, which was in February, we've been getting through the final stages of constructing the crushing circuit. So crushing circuit is now into wet commissioning. There are a few more crushers to go on to the end of the circuit in order to complete it. But certainly, even with the current setup, we're seeing a much better product go into the mill. And what I mean by that is the rock size from the sulfides is essentially smaller and about to get smaller yet. I think the tertiary crushers, the end piece of that to get down to 6 mm product is should be coming out of the port either today or tomorrow.
And as a quick review, oxide is dirt, sulfide is stone. Is that correct?
Yeah, so that's a good way of putting it in simple terms. Oxide is like at the top, or more like soil, and sulfides are more like hard rock. Yes.
There we go. Hey, Bill, we've seen a big pop in both the price and volume of trading in the gold markets. As we speak, I'm looking at 2,222. What is Bill Holter's perspective on what's going on right now?
Yeah, we've had a pretty good move since the November lows. And since November, December, January, they were fairly quiet months on the retail side of the market. And you can see that premiums in both gold and silver have collapsed and now are at least at normal premiums, if not historically low premiums. So this is the move higher is not been from the retail side, it's been from the institutional side. And on top of the institutions, you've got to add the central banks as buyers. There's been a $40 to $50 premium on the Shanghai market over LBMA and COMEX. And what that's led to has been arbitrage, where investors buy in the West at the lower price, deliver it, and sell in the East, and lock in that profit. So what that's done is it's cut supply, to the big traders, the institutional market. So supply has tightened up, and when supply tightens up, the price rises, and that's what we're seeing.
Steve, this recent pop in the gold price is really a good thing if you're in the mining business selling gold. What does gold at these prices? In just a second, I'm looking up. It's at 2,222 right now. How does that affect your financial projections and your capital budgets?
Yeah, so before I answer that question, I reiterate Bill's point around what's happening in the gold market. When I meet with institutional investors, that is the exact same philosophy, is that it's people are selling in the West and China's buying everything. essentially, and that trend is certainly out there. What does it mean for us? So, well, obviously, if you're producing gold and you're selling it at a higher price, then you're getting more money. The key is in these markets is how's inflation affecting you on the other side of the equation, because that's partly driven into the gold price. But our costs have been relatively stable, and our input costs have been relatively stable. So obviously we're seeing the benefit of an increase in gold price, of increasing the expected cash flow that we get. And in our business, and I keep on mentioning this, is that we continue to reinvest in that business. So over time, if we see a higher gold price, then we'll see more robust capital programs and more robust growth around the asset, from everything from exploration to additional expansions over time. If the gold price goes down, that will be more slower, not unlike any other business. But I like the current gold price, and we certainly are seeing the benefits of that. Not in stock price eventually, and I think I'm sure you guys are going to quiz me on that in a few minutes, but and we can answer at that particular point in time. But yeah, a higher gold price, good for us.
I have a quick question. I have enjoyed seeing the pictures that Christina Lally has been posting. You guys are running 24 hours a day. Now, do you break that into 3 different shifts? Do you shut down for maintenance? How are you approaching that?
Yeah, it's 2 shifts. So we have 2 shifts that work 24 hours a day. Obviously, maintenance is both scheduled and unscheduled. You are dealing with hard rock going through metal, so it will break down. You're dealing with motors and things of that nature. So there's some non-scheduled maintenance, and then there is a scheduled maintenance as well. And you have to keep a good eye on everything. This year has been a really good learning year around that. You keep on learning in any business as you continue to grow, and what your scheduled maintenance is required, and what you need to be doing to be proactive maintenance. And of course, you're always going to have unscheduled maintenance as well in the mining operation.
There's a lot of people taking credit for the gold price when it goes up, but clearly a rising price in gold is going to lift all the gold industry in the harbor. That said, how is TRX matching up to the peer group that you have identified with?
Yeah, so what you're really saying is, a rising tide raises all boats.
I was trying to be metaphorical, Steve. Work with me here.
Yeah, metaphorical. So look, I would say we've held up reasonably well on the stock price. So small cap companies have been under pressure in the market, just generally. It doesn't matter what the industry is. And mining has historically, and still is, an extremely capital intensive business. In its essence, when you talk about it, it's a very simplistic business, but it is difficult to execute. Even though in its essence, it's taking rock out of the ground and getting a product out of it. But it is a difficult business to really execute. And, I think we've held up reasonably well around trading and things like that. I would like to see a higher price, obviously, and more focus put on equity values. I don't think that has come yet. And everybody that I speak to believes that we still need to see a little bit more of a rise in the gold price for that to happen. But certainly, I think right now, you're really being valued on, are you executing your business plan, and are you coming to the market anytime soon? That's always a question that investors have, which we aren't. And cash flow is king. Despite a good price of gold, as Bill mentioned, the physical is trading around the world. I think investors are still looking at miners as a regular business, not a gold business at this point in time. That's my general sense. I'd like to get Bill's thoughts on that too.
Yeah, I'm going to Bill.
All the time.
Most people know Bill as Mr. Gold now, but he's actually a recovering stockbroker and branch manager in the retail markets. And if you've lived through a time when gold mining stocks benefited from the rise in price of gold, it's a very interesting time. I have not. But Bill, I'd like to know, what do you expect to happen to gold mining stocks such as TRX as the price of gold, as Steve says, continues to advance?
Well, first, let me just say there is no bull market like a gold bull market. And the reason I say that, investing is emotional, fear and greed. And gold can benefit obviously from the greed side of it, momentum followers, but the fear side of it is what really drives money. And if you go back to, just for example, the late 1970s, that's when Jim was really active in the gold market. By 1980, there was not one gold stock that was trading under $1. And I mean, there were plenty of stocks in the mid 70s that were trading at a penny, 2 pennies, 5 pennies. So, talking about your tide lifting all boats, and a lot of those companies, they weren't even real companies. So the point I'm trying to get at is once you get some type of momentum into the mining share market, they'll run like scalded dogs. And in my opinion, what we have coming from a financial and economic standpoint globally is we're going to be in dire straits. So it will be fear that drives people into gold. And the reason you want mining shares is because they trade like gold on steroids, both downwards and upwards. When gold drops 10%, you can easily see mining shares drop 25, 30%. When gold moves up 10 or 20%, you can easily see a 40, 50, 60% move.
That's some. That's a lot of that's a lot of leverage, Bill.
Right, it's operating leverage, and Stephen can talk about the operating leverage, but that's the idea, is that because you have a cost of production, there is operating leverage. Actually, the higher your cost of production, the more your leverage is, because every $1 or $10 or $100 higher in gold goes to your bottom line, and it's bigger because your cost of production is higher. I'm comfortable, just since TRX has come online as far as producing and having cash flow, I sleep well at night because I know that, and we're not a high cost producer. We're a lower cost producer. But that comforts me because even in a downturn in gold, the price of gold, it's not going to cripple TRX, whereas a high cost producer, that their cost of production is $1,500, $1,800, $2,000 an ounce, they would have financial problems, whereas our cost of production at TRX is what, in the 800, 850 range. There's plenty of room to the cushion to the downside. And I guess I might as well add this in there. The reason I'm involved is I'm a property guy, and I don't look at TRX as a 2 million ounce project. It's a very underexplored property, and I expect that 2 million ounces to be several multiples or many multiples of that $2 million or 2 million ounces. So that's the reason I personally got involved to begin with, because I believe that the property is pregnant.
Steve, at some point, based on what Bill has just conjectured on his own part, it's my guess that we're going to be an acquisition target by a larger, well-capitalized mining company. So what's the plan from TRX when those people come courting?
Yeah, it's always an interesting question. Look, I look at that as being successful in executing a business plan. And then you have to assess at that particular point in time, and shareholders have to assess whether the prices are appropriate, whether you're undervalued or whether you're overvalued. What are you actually leaving on the table? What are the benefits and what are the drawbacks to such a transaction? So, it's theoretical in nature. As everybody knows, everything is for sale at a price. And shareholders ultimately get to decide that price. But certainly if someone comes to me today and says, well, you're trading at around 40 cents, are you willing to be taken over? The answer is probably a firm no. So but if someone came at just conjecture, but say $5, then we'd have to give shareholders a call. if you get what I mean, on the opposite end. So it's, it all depends on, what the value is at that particular point in time, what the value prop is, and if it makes any sense. But ultimately, shareholders get to vote on that and decide on that.
Like Bill says, there's no bull market like a gold bull market. And I have a feeling that sometime within the next 36 months, you might have to face that drama. Hey, listen, the next question is for both of you, and I'll start with Steve. Steve, there's always a trade-off between rewarding the long-term holders of the stock with a dividend, and at the same time trying to build the reserves with drilling and exploration. How is management at TRX assessing this right now?
Yeah, so really in a different way, what you're asking is how are capital allocation decisions made?
Mhm.
And really at the end of the day, your capital allocation decisions are based on returns. If you start in a mining business paying too soon dividends, for instance, that means probably to the holders of that stock that you don't have a lot of better uses for that capital to create value. And so right now, when I look at where we can spend our money and the payback period on that, and I look at payback period because that drives returns, right? So the quicker your payback, the higher your return. And when you look at that, we got stuff still to be spent that's going to be less than 3 months payback. So we're not returning any money to shareholders when those type of options exist, because the value creation from that is a lot greater than returning that particular dollars back. I think also in your question is when you're looking at markets, ultimately the share is what the investor has, and what can drive that share higher. Would it necessarily be a dividend or a buyback? Right now, I think in markets, depending on your liquidity, and if I look at the liquidity of the market today, if I had to make a capital allocation decision between a dividend and a buyback, I think it's pretty simple to do a buyback because your liquidity profile is in there and you would get a higher benefit from that versus the dividend at this particular point in the market. If you're extremely liquid, probably not. But right now with the decrease in liquidity, I think that would be the better option. But ultimately, if you got good projects to invest in with high returns, that's more benefit to shareholders.
Before I get
That's
to
my
Bill,
view.
before I get to Bill, I will say this, Steve, that as a CFO, I would say that anytime we look at a buyback or dividend to assuage a stockholder, we're getting lazy as managers. And the fact
Yeah.
that we can multiply that capital by just exploration and exploration alone,
Yes.
it's pretty exciting. So don't be a lazy manager. That's just from your cousin Denny here. So
Yeah. So
Bill,
when you talk about exploration, and you get to Bill's question in a second, but like when you talk about exploration, an approach that we said, and I've said this to the market, is the plant expansion is one step backwards, but ultimately 2 steps forward from an exploration perspective. Because right now we're not doing a lot of exploring as we take that capital and put it into the plant. But once that plant comes online, then that capital is going to be taken and put into the drill bit in a much larger program than we could have today going forward. So, I look forward to framing out those business plans and getting those into the market over the next little bit in the short to medium term. So, shareholders can start to understand what we're going to do here and how we're going to drill this thing out, and do that exploration. Because ultimately, look, it's a risky business, exploration. It's either there or it's not there. We think it's there. So, it's an exciting time. It gives a lot of optionality to a lot of investors.
all right, it's time to get to my second favorite Texan. And I say my second favorite because my niece lives down there. She's my first. But Bill, you're a stockholder. You've been a stockholder for a long, long time. How are you assessing this trade-off between maybe a dividend, maybe a buyback, or just keeping drilling?
Oh, I think that's a no-brainer, and I've spoken with management several times on this. I mean, I'm of the camp, drill, baby, drill, because as I mentioned, I believe there's far more gold on the property than is obviously known at this point and even thought. let me just say this, that a perfect property for me would be one that doesn't have any overhead, but has 10, 20, 50 million ounces in the ground, because those ounces are not going to go away. And from a macro standpoint, when this system does break, what you are basically, you are a bank. You're sitting on a vault of gold. Now, what TRX has done is they've created the ability to produce the gold, to produce cash flow. And obviously, with the deal with Tanzania, TRX has to produce. I mean, that was by contract. But for me, a perfect property would be something that's sitting on millions of ounces of gold, doesn't have to produce it, and only has to come up with the mining licenses for expenses each year. For me, that would be perfect, because I don't know whether it's going to take a year, 3 years, 5 years, 10 years, but ultimately the fiat currency system is going to collapse. And if you're sitting on millions of ounces of gold, you then become a bank, because you have money that's sitting in the ground, waiting to be dug up.
Absolutely.
Yeah.
Steve, and I think that the institutional people are probably looking at it with the same eyeballs that Bill is. But I'm interested in your assessment or commentary on institutional investors and their market sentiment right now. How are the institutional investors assessing TRX?
Yeah, so with TRX specifically, because I sit in a lot of institutional meetings, and I could be fairly specific on this at this point in time, because I've been here 3 years now, and so I remember meeting some of these institutions early on, and I remember meeting them lately. And really, what you needed to see in order to start to get institutional buying into this particular stock is they want to see execution. So they want to see you doing exactly what you say you're going to do. And then they want to see you go out and execute it. And what is interesting is the commentary that's coming back is, well, you told me you were going to do this 2 years ago, for instance, and you actually did it. And so now you start to build a level of trust around, okay, now I'm starting to trust that you are going to do what you say you're going to do and be open and forefront with me, and what your challenges are too. So one thing in business is you have to be balanced, right? You obviously going to be promotional on the upside, but nothing in life is without its challenges. But the key to that is, great, you've identified them and you've dealt with them in a successful fashion, and you don't hide them. And I think building that sort of rapport up in the market will serve shareholders much better over time, because you build a trust of institutions. They want to know when they invest that you're going to do what you say you're going to do. If you lose that, then you're not going to get them to invest. But now I would say also their funds are still constrained, and there's still a little bit of a hangover of that. But certainly we're much higher up on the radar than we used to be.
I always told Andrew Cheadle that I felt bad for him, because not only is Mike Leonard the CFO and an accountant, you might as well be a CFO, an accountant, and to have two mother-in-laws looking over you all the time just to prove to those institutional investors that, by golly, we're doing what we said we were going to do. It's something you guys can hang your hat on.
Yeah, hey, I think I'll just go in on that point as well. Is you get a lot of junior miners that don't have a pulse on cash as well as we do, and looking at cash and cash foremost in order to reinvest in the business. So I'm going to debate with Bill what his ideal property is, because I think one that produces some decent cash that could grow its resources is better than one that has a lot of resources and needs to raise cash to grow those resources. So I think we're into that sort of situation.
And for the record, as a stockholder and as an advisor myself, I'm grateful to the two of you that you're so tight. When I say the two of you, I'm talking about Leonard and you. You guys are tighter than the skin on a watermelon. And that's exactly what a stockholder wants to see, that you're not wasting money. Let's go to Bill now. Yeah. Hey, Bill, you were basically always on the retail side of the markets, but what are your observations about when the institutional investors when do they come in? They're measuring gold situation right now, I'm sure, but when do they come in?
For sure, they come in when they can't get physical supply. Because if you can't get physical supply, how's the best way to get actually more ounces or control of more ounces for your dollar than buying a mining company that has reserves? So I think once supply becomes difficult to obtain, then there's no other game in town. They have to buy mining companies.
Yeah, look, I'm gonna just ping on Bill's comment there because I've had meetings even this week, with funds and institutional investors that are looking for that physical. So to Bill's point, the premiums have gone away, and they're all looking for physical at a discount in order to create their own premiums, and so we're seeing that sort of trend play out. To Bill's point.
Has anybody approached you guys to buy your doré other than your usual distribution? That has always been a trick, and I don't know whether it was Jim or Bill that taught me that once supply gets tight, then everybody starts going directly to the mines. Have you been approached in any way, Steve, for your doré?
That's exactly what I was just describing. Yes.
Okay.
Yeah.
All right.
So yeah. So look, like I said, everybody is looking for physical at a discount. And so your traditional areas that have done that, the Europeans like that sort of trade. And we have done gold forward contracts with Europeans for financing purposes, and that's in our financial statements for physical. More and more are popping up that way. There's always Indians looking for the same thing, as well as the Chinese, Middle Eastern people. There's a lot of people right now, going around looking for ways to get some discounted physical.
Steve, you've been on both sides of the investment world, and I told you I was going to ask you this question. So belly up to the bar here. How do you think Wall Street, TRX itself, and even investors in general, how are they accurately valuing a mining firm, including TRX right now?
So I did reference this earlier in this interview. Is I think the traditional valuation metrics of a miner are not. I don't think they're valuing them that way at this point in time. What I don't think has happened yet is when you look at the rise in gold prices, particularly in the mid 2000s, and the expectations that they were going to continue to rise. A lot of stocks move forward because in any environment like that, to Bill's point, you continually see margin expansion. And so thus, anything that is anticipated to have margin expansion or continued higher EBITDA as a result of the increase in the gold price got a higher multiple, right? So you would trade, if you believe that something's going to have higher EBITDA in the future, you would trade them on a current EBITDA basis at a much higher multiple than you would a stable company. And that's a normal valuation. I do think that what you're seeing in today's market is cash is king still. You better be executing, and you better be doing what you say in order to survive, these difficult markets. Like, although the gold price is rising, and although tech seems to be coming back, I've heard cannabis is starting to come back a little bit. The gold market and mining stocks are kind of in those same realm. We haven't come back yet. So eventually, as Bill said, it will come back, and we'll get to a better valuation. But I think right now you're really looking at survivability and cash flow as the main metrics.
Steve, this is the last question. We've noticed a number of important M&A transactions occurring in Tanzania within the mining space.
Yeah.
And that's been taking place over the last year or so.
Yeah.
What are your thoughts about that?
So I think in the gold space, and I'll get into a little bit of geopolitics here, you've had some events happen in West Africa where a lot of gold mines are that would impact valuations, as well as impact the increase the risk of operations in those regions. You've had coups, which people can we have successfully invested around in the past. We have some jihadists, which people have successfully navigated in the past. But there is some Russian influence there now, and I think the sanctions risk is higher, or perceived sanctions risk is higher. And so you have a lot of large operators in West Africa. You're starting to see some African operators look east to a much more stable jurisdiction such as Tanzania. So that's part of it. I also think another large part of that is, why is it perceived as being more stable at this point in time? And the government is open to investment. And so when you look at that sort of factor, that the government is friendly to investment, wants to see the investment, and wants to work with investors, those 2 points in and of themselves lead to a much, much better jurisdiction. And we've had this conversation before. I fully expected Tanzania to get a better perception for investment over time. It's happening a little bit more quickly than I originally anticipated. It never really bothered me as much because, as you guys know my background, I'm a well-traveled individual and dealt with lots of places in the world. So I do know that if you go in and you're fair, open, and transparent, no matter what the regime is, you can get things done. We've done that under different presidents here in Tanzania, and we'll continue to move along. What I'm glad is, at least now the investors are getting more comfortable with it. I was always comfortable. I know of what we described here, but investors probably don't have the same type of experience as I do, not all of them. And it's taken a while for them to get a little bit more comfortable with the East African risk.
Well, Steve and Bill, that's all I have. Bill, I'll go to you. Is there anything else you want to share with us today before we say our goodbyes?
No, I think this was a good interview, covered a good amount of ground. And I've said this now since production began. I go to sleep at night and I'm comfortable knowing that it's a solid company in my estimation.
Well said. Well, joining me today on this call has been Steve Mullowney, Chief Executive Officer of the TRX Gold Corporation, and my old buddy, the cowboy Bill Holter, still one of the premier gold and silver brokers in the world today, and a great analyst of the history of gold and trading, and certainly in the markets. Thanks for sharing some time with us today. We hope to be able to do this again in a couple of months. If you've got any questions, feel free to reach out to Christine Lally at TRX Gold.